So let me record that. Okay, so here we are. Let's jump in to managing cash flow for business stability. Confidence managing your money year round. And sometimes people feel like they don't have a good handle on their business because it's seasonal. Well, if you have a good process and system in place for your cash flow, seasonality does not become an issue anymore. So let's talk about how to make that happen today. So first, let's talk about cash flow. We kind of talked about it a little bit, but basically cash flow is the movement of money that goes in and out of your business. So it's not about how much you make. It's about how well your money is managed because you could be making money, providing services, spending money. But if you don't have your cash flow set up properly, the money that you've made, right, isn't coming in. Maybe you have an invoicing issue. The money that's going out um, needs to be paid, isn't getting paid on time. You forget about something annual expenses. You want to talk about, or we were talking about today, how we manage our money. Positive cash flow means that more is coming in than is going out. And we're including everything: loan money, credit card money, loan payments, credit card payments, income, expenses, what you pay yourself, what you pay for taxes. All of those things affect cash flow. It's all the money that's coming in and all of the money going out. Negative cash flow. So positive cash flow means there's more coming in than's going out. That's positive cash flow. Surplus cash flow. Negative cash flow is can often indicate that there is trouble ahead. So having an understanding of this is important, but we're also going to talk about why it's critical. So first, your cash flow is important because it keeps your business stable and flexible. So not just for stability, although that's really important, but also if you have good cash flow coming in and you have a good system for managing your cash flow, you'll be able to make movements, right? So pivot, as our 2020 buzzword, right, was pivot. A lot of businesses were able to do that out of necessity, but also because they had some of those funds coming in from COVID, they were able to transition. Evolve is the word that I preferred during that time instead of pivot. They were able to make those decisions. And the same is true for you, even without a great, worldwide pandemic happening. There's always things that happen in life. So if you have a good process for managing where your money is coming and where it's going, that means when a relative gets sick or your kid gets injured or you a big client drops out, whatever it may be, there's always life factors and things that happen that affect our business. And so having good cash flow or having a plan for your money helps you to stay flexible for those kinds of times when things adjust like that. It allows you to cover expenses without panicking. I know I've been there. I'm sure all of you have been there as at one point or another as well. When something happens, often we're scrambling. We're panicking. We're freaking out. We're creating chaos. Having cash flow management, positive cash flow um, systems in place will help you to lessen the panic. Maybe it's tax season. We just got through tax time through the first wave of tax time where people sometimes they get their tax bills and they're like, oh my gosh, panic of how am I going to pay this tax bill? We want to eliminate that. So we want to talk about cash flow. Having good cash flow, having a plan for cash flow also helps you grow without risking collapse. So making those strategic or calculated risks. So I always talk to people about the time, when I went from working part-time to working 100% in my business. And at that time, I did not have the income that was coming in to support me leaving the job that I was currently at. But I was working 20 hours a week at this other job. And I knew at that time, I knew how much effort it took to get a new client. I knew what steps to take, how many conversations I needed to have, not like on paper, but like intuitively, because I won't lie, I didn't have those numbers together at that point. I'm still a little rusty on it now. But at that point in time, I knew I knew that if I spent those 20 hours working on my business, working on getting clients and getting sales, that before I knew it, I was going to be able to replicate that income and probably and surpass it, which is essentially what ended up happening. But for me at that point in time, it was a calculated risk. And so when we have those opportunities that come up or those transitional times when we want to get to that next level, sometimes you won't have that actual money in the bank. But if you have a process and you have a system in place for covering that, you have that cash flow plan in place, you will be able to take those calculated risks because you kind of know the numbers with it, and you can break those down better so that you're able to make those risks without collapsing your business, which is a really important part of growth. It really truly is. You've got to be able to do those things if you want to scale and get to the next level. Another thing that it helps with is it helps build trust with your team, your lenders, and vendors when you have that cash flow, when you're able to pay people on time, when you're able to pay consistently, when you're not worried about making payroll or paying that bill or paying that vendor, or making that loan payment. It's going to help build that trust because essentially when you get to pay, when you pay people on time, it helps build that trust in you. Okay, so let's talk about some of the top cash flow mistakes that business owners make because they might not all be obvious to you. So looking at the bank balance to make decisions. This is what we refer to as bank balance accounting. And don't worry, if you're doing this, you are one of about 70% of business owners that do this. So 7 out of 10 business owners look at their bank account to make decisions. But that does not really give us a true picture of what our cash flow actually is. So that's one of the big mistakes. Forgetting about upcoming expenses is another one. For upcoming expenses or bills. I just realized that this was like not in order. Okay. Or didn't have that little icon thing there. Okay. So not tracking, well, forgetting about upcoming expenses or bills. So this is exactly why bank balance accounting doesn't work because you'll often forget about things that are coming up. What about those annual expenses? What about those quarterly expenses? So it doesn't account for those kind of things, which are important to think about and look at when you are talking about cash flow in your business. Um, Not tracking customer payments time, the timing of their payments. So if you have accounts receivable where you're invoicing customers and then you're going to get paid later, if you're not tracking like when those things are coming in or accounting for it, it's going to be hard to balance your cash flow, right? Because essentially what you want is your money coming in and out around the same period of time. It keeps things parallel, it keeps things smooth, it keeps that flow going evenly versus it being like a big squirt, big rush of water or whatever, if you want to visualize this, a full blast faucet going off and then just like a trickle, trickle, trickle when it's coming, when you have like more expenses going out. So like imagine the water going into a bucket and you're like taking this little tiny scoop, and then it starts to trickle. And then as it's trickling, the water's trickling in, you're taking this big, huge scoop to take all that money out. Like that's not an even flow of cash coming in. And that's where we want to get that timing together. So not tracking your customer payments when the timing is coming in is going to make a big mistake in your cash flow. Overspending on growth too quickly. So this is another one that I see, especially startup-ish businesses or businesses that are under 100,000, I would say, because that 100,000 mark is like a huge mark to get to. And often there's a lot of effort that has to come before that. Um, excuse me, I'm still in the process of a cold. Let's see. I was sick, and then I saw my niece. She had little baby germs on my low immune system, so I'm working on building that back up. But excuse me for the so overspending. So clients or people, a lot of times business owners that are under that 100,000 mark, one that they sometimes get targeted in terms of like all of these different programs and things that can be helpful, but sometimes they can't be as helpful as they present themselves to be. um in that first 100,000, you really need to work on, in my opinion, you need to work on figuring out like how to get to know your business better. So like how to talk to people, how to what kind of what do you have to do in order to get clients? Like I feel like organic and bootstrap is like the best way to go when you're under that 100,000 mark, because you need to know more about your business. Like it's when we try to take the shortcuts at that level, we can often overspend on growth too quickly. So either you're going to spend the money and you're going to get the leads, but your systems internally are not in place. So you're not going to be able to handle the capacity or have the capacity to handle all those clients. Or you're going to spend the money before you even make money or even know how you're going to make money. And then you end up like going into debt, is often what happens there. So this is a big mistake that I see people make. They overspend on growth too quickly before they should. And then it affects their cash flow. Then there's no reserve for slow seasons or emergencies is another mistake that I see business owners make. They don't have any kind of nest egg, no reserve. They know they have seasonality, but they haven't really mapped out what that looks like, and they don't have anything put away for emergencies. And I'm not saying you need to have $100,000 in the bank before you can make decisions or start not penny pinching, right? Pinching pennies, kind of a thing. Like you don't want to have the scarcity mindset, as they say, but you do want to be prepared. Like part of being successful and sustainable is to plan for the unexpected. Like you got it. That's part of your job as CEO is to plan for those contingencies, plans for the things that are going to be coming down the road and have an effective plan for those things. So if you don't have any kind of a reserve or money set aside, you're you're at risk for issues. But that's also a big cash flow mistake, because even if you have money, that profitability coming in, if something doesn't come through, if you had an unexpected expense, it can wipe out the cash that you have. So, excuse me, you want to make sure that you have some kind of a reserve set aside for your slow seasons or for emergencies. And that doesn't have to be hard either. Okay, so some of the indicators to watch for bad cash flow is your cash inflows. So all the actual cash received, client payments, loans, interest, you want to make sure that you're watching what is coming in to your organization. These are some key things to look at. Another thing is the cash outflows. So making sure that you're watching what's coming in, all of the things, client payments, loans, interest from accounts and things like that, investments, but also the outflows, every payment that's made, bills, payroll, purchases, loan payments, interest payments are another thing that can often get missed. So looking at your inflows and outflows are some key things to watch. You also want to look at your bank balance trends. So are your balances growing? Are they stable, like staying consistent, or are they going down, down, down? So like if you started the year and your bank balance was $20,000, and then in February it was 25, and then in March it was 15. Like what are those trends that you're seeing? That can be a really good key performance indicator just right off the bat. That's going to tell you where your cash flow is at, because if your cash flow is at a surplus, meaning that you have more, that positive cash flow, in theory, your bank balance should be growing or at least staying stable, right? If it's constantly going up and down and up and down, month to month to month, you may have a big issue that you want need to look out for. Excuse me. Timing gaps. So again, back to the accounts receivable, that's a big thing that pays, or that's a big piece that plays a part in cash flow, because on your books it can look like you made money, but you might not have actually received it in there. So that's why we talk about that a lot. But looking at the timing gaps, like we had just talked about, when are you getting paid, and then when are you have to pay? You want that part to be parallel. You want that to be consistent. You want it to be a smooth flow of in and out cash flow going in and out of your business, and having it be real consistent throughout the time. So looking at those gaps, figuring out those timing gaps. I actually have a client where we've been working through this process. So initially she was only billing her clients once a month, but she was paying her contractors twice a month. And then or once a month as well. So she was invoicing her clients once a month, and she was paying her contractors once a month. And she was discovering that this, or noticing that there was like this cash flow issue, like she wasn't able to pay herself, or she would be short when that money came through. So we changed it to her billing her clients twice a month. So instead of it just being once a month, now she's getting that invoice out quicker. when you get your invoices out sooner to your clients, they typically are going to pay sooner. Not in all cases, but in many cases, it does. It will help to speed up that cash flow. And then we changed her contractor payments to be twice a month so that when the money is coming in, it is then going out at the same level of it flowing in. So we kept that more consistent. We looked at when the billing was for different subscriptions that she had. We changed those to be more consistent for when her invoicing typically was due and when she would typically get paid. So looking at those timing gaps, is there anything that you can change there so that you're more efficient, so that you're stabilizing your cash flow as it's coming in? And then looking at those recurring fixed costs, rent, software, payroll, expenses that hit no matter what are considered recurring or fixed costs for your businesses. Looking at those so that you can predict your cash flow more so, or that break even a little bit more consistently. These are some key indicators to watch to help manage and stabilize your cash flow. Cash inflows, cash outflows, bank balance trends, timing gaps, and recurring fixed costs. Looking at those things is really going to help you. Okay, so predictable cash flow starts with awareness. Let's talk about that. So I mentioned when I was in business and looking to change from full time or part time to being full time in my business, um, I had a better understanding of how my business flowed, right? And so the same is true with you. You need to think about, spend some time like thinking or looking at your financial rhythms. Do you have seasonality? What do things look like on a monthly basis? Is it client based? What are the rhythms to your business? It might happen like there's a different rhythm that happens monthly. Your rhythm could be seasonal. Your rhythm could be client based, depending on how many clients you have in or what projects you have going on. Your grant cycles, if you're a nonprofit, understanding those financial rhythms is going to help you be able to predict more of your cash flow as well. Another thing is to anticipate those high expense months and slow periods. So, do you have annual expenses? Do you have licenses that are come up that you have to pay? Um, do you have software that's on an annual plan? Insurance is another one that typically gets paid on an annual basis. How are you accounting for those things? And the same thing on the other side with slow periods. Like, do you have slower times of the year? Like for us, oftentimes like in the summer we kind of slow down a little bit because business owners are taking vacations. Like they're not trying to think about their money, but in the beginning of the month and then the fall, typically like those are our busier seasons with taxes, and people just kind of getting out of summer mode. So how are you anticipating that? How are you thinking about that? Are you predicting that and putting that into your process of managing your cash flow? And then recognizing trends early. So the only way or the best way, I should say, there might be other ways, but the most beneficial, efficient, consistent way to recognize trends is to do your bookkeeping consistently. So, and I'm not just saying that as an accountant and bookkeeper, like truly, if you want to know where things are at in your business, your books need to be up to date. So, if you haven't been doing your monthly bookkeeping on a monthly basis, you need to talk to me or talk to somebody about getting that on track. I'd be happy to have the conversation with you, but at the very least, you want to make sure that you're getting that on track because it's going to be your best way to recognize trends early. And so then you're able to adjust accordingly. Another way to do that is to put a system in place like Profit First. Profit First is a cash flow management system methodology. It helps you to manage your money, to stabilize it, to identify those pain points. But another thing it will help you identify is your trends on a regular basis because it's gonna help make your money more tangible, and make you more strategic about where your dollars are coming and going. As well. So I highly recommend you looking into Profit First. If you need a copy of the book or if you want to talk more about it, please let me know. I'd be happy to have the conversation with you. Okay, so let's talk about some best practices in order to stay consistent. Regularly review your cash flow report. So again, going back to your bookkeeping, you want to make sure you have your reporting in order. QuickBooks, all the other softwares, they do have a cash flow report available where you can see where the money is coming and where it is going and what those numbers are on a monthly basis or during whatever period of time you select. Um, it's going to help you to keep an eye on those things consistently. You want to make sure you're using some kind of a forecast tool to plan 30, 60, 90 days ahead. The freebie or the bonus for this class, if you comment or if you attended live, you will get a copy of my cash flow management sheet, a template. And it's really basic, but if you plug the numbers in there, it's going to help you see what's coming in and what's going out so that you're able to then plan for those things and plan out 30, 60, 90 days ahead. The sheet that I created, it has all 12 months in it. You just plug in the numbers and it puts it on a summary sheet so that you can see what it is month to month, or every month you'll be able to see that. You want to make sure you maintain a reserve or buffer account. I will challenge you. Your challenge for this call is to put 1% of your income in a separate bank account. And I know what you're thinking, 1% is nothing. And you're right, it is nothing. But that is kind of the point. We want it to be so small. Excuse me. We want it to be so small where it doesn't make a big difference, but it makes a big impact, because you'll start to see that that 1% might sound like a lot. Like if you're bringing in, $10,000, 1% is $300. Did I do that right? Oh my goodness. Okay, let me just check my math because that ended up being harder than I thought it was going to be. Times, yes, $300. Okay, I had to double check. I'm really bad at doing math in my head. Don't judge me, please. Okay, so if you make $10,000 a month, that's only $300 a month that you'd be putting into the savings. But the thing is that $300 adds up, right? Because in just 3 months, we're talking about $1,000 put away in your reserve account. And you could definitely do more than 1%, but I challenge you to start with 1%, because it's going to make a big difference, and you're going to see how that small incremental percentage adds up. And then and it's a habit that you can then continue to grow and navigate and nurture, um, and expand. Maybe if 1% you're like, oh, 1% was nothing this month. Right. Next month, do 2% and see how that goes. It'll just help you to start building something. If you have nothing, it's going to make a huge difference. Aligns your spending with incoming revenue timing. So if you do have subscriptions, if you have contractors that you pay on a calendar basis, like look at when your money is actually coming in and when it's actually going out, and see if there's any adjustments you can make to that timing, because that's going to really help your cash flow. If you have one of those loans that are that are pulling money out all of the time, take a look at if you could consolidate that into something where you only pay monthly. Like that will make a big difference as well. So take a look at when your money is going out and when your money is coming in, and make sure that you're trying to align those as best as possible. All right. So let's talk a little bit more about managing seasonal highs and lows, because I know for many, many businesses, you experience seasonality even if you don't realize it. Okay, so first thing is to identify is to identify your seasonality, right? So you want to make sure that you're taking a look at what your seasonality actually is. Whoops, do you have slow summers? Do you have busy holidays? We've got a lot of our product based businesses are very seasonally driven, because they'll have really great summer months and then slow down in the fall and then build up in the spring or in the for Christmas time again. So take a look if you can identify what your seasonal patterns are. If you haven't thought about it before, I bet if you take a look at your bookkeeping that hopefully is in place, you'll be able to see the trend of like when money is coming and going in and out of your business. And pro tip, if you've kept up with your bookkeeping for several years now, you'll be able to run, or you should be able to run a year over year where you can see what happened in January in 2024, and then what happened in January in 2023, and all the other months, and like see if you've noticed any kind of a consistent trend over those years. So that's a pro tip for that. Spread your large expenses across profitable months. So if you have that seasonality and you have larger expenses, see if you can kind of more align those and shift those to being the same kind. Or another pro tip, and we do this with Profit First, we take a look at all those expenses, create an annual expense account for yourself and figure out how much that you need to put away in that account every month so that you're able to stabilize those expenses. So then instead of you worrying about like having the money when that amount is due, like start putting money into it every month so that when that big expense is due or that larger expense on inconsistent expense or variable expense is due, that you'll be able to have that money set aside for that. Same is true with taxes. You want to set aside profits during the high seasons to cover the low seasons. So, like that, spreading out those expenses, taking a look at when things are due and when your seasonality hits, it's really going to help you be able to stabilize your cash flow. So, take the time to do it. All right. So, now that I've talked all about that, let's talk about what our key takeaways are. Cash flow. It's not about what's coming in, it's also about timing, not just those round numbers. We want to make sure that we're being aware of what's happening in our business. So this numbers part, it's really, really easy to overlook. It's easy to not pay attention to it until something hits the fan. It's really easy to ignore it because it's not your deliverable, right? It's not the thing you have to focus on doing every day. It's not the task in front of you. But this numbers piece is really important to building a successful and sustainable business. And awareness helps you avoid surprises. And I generally like surprises, like good surprises. Like if you want to bring me a cake or send me a gift, like I'm all here for it. I am not here for financial surprises that end up throwing my plans off or making me crunch in another area. So we want to make sure that we're being aware of our finances, being aware of what's happening to prevent those surprises from happening in our finances. Financial surprises are not here for it unless it's like getting a bonus or something. But even then, right, it's kind of still expected because if you got a bonus, it's because you earned it in theory, right? Anyways, you get what I'm saying. Okay. And another thing is that consistency really helps create the stability. So if you're having trouble with your cash flow, if this is a pain point for you, I would recommend making it more consistent. And what I mean by that is making your bookkeeping more consistent, taking a look at where your money is going, saving that 1% every week for the income that comes in and putting it into account as your reserve. Making it consistent really helps to create stability. The more consistently you do this, the more of a habit it's going to become, and then it's going to be easier instead of harder to be able to address things as they come. It's going to make you a better business owner. Consistency, like I said down here, consistency is the key, and that's true. And then when you are stable, so stabilizing your business as is allows you to grow. And I'm pausing so that can sink in a little bit. Stability creates room for growth. um, and sometimes there are those calculated risks, but again, when we have a system and process in place for our cash flow, we're able to better make those calculated risks to where they are calculated risk with an ROI, right? Because at the end of the day, that's what we need to have, right? If we take a risk, if we do the thing, if we go farther, stretch farther than where we currently are, we want to make sure that we're getting an ROI at that. So stabilizing the things that are priorities, stabilizing the things that are foundational for your business is going to allow you to then have the room to grow to the next level. So that is what we want to do. Okay, so cash flow, super important. I think we can all agree. If you need some help with this, the way that we help our owners with this is that we provide, or when we put the system in place, let me back up. So we help people implement profit first in their businesses. And ultimately, what happens is that they get immediate clarity on where money is going because we use separate bank accounts. If you want to set up profit first on your own, that is something you definitely can do as well. I have a course if you need some assistance with implementing that, but you want to do it yourself. We also build in profit. So it build in a profit first discipline or profit discipline. So instead of using everything that's left over to then save for your reserve or save for taxes or pay yourself, we want profit to cover those things. So we automatically build profit in to the process, into building this discipline of building profit first. Um, and it really switches things around. It also helps provide, we also help provide stress-free tax savings, right? Because that's part of our process of implementing. We make sure that you save for taxes. So taxes are not a burden anymore, not a surprise, not one of those things that create chaos. We also help you make smarter spending decisions. We control overspending and leaner operations. And leaner operations, I think sometimes people are like, oh, leaner means like bad quality. Like, no, that's not what that actually means. It means that every dollar that you're spending has a purpose or an explanation. And really making sure that your business finances are going to the things that are actually important to you. So it might mean cutting some things out or readjusting how our operations are operating or systematizing things more so that they can be replicated versus having a whole team of people to do the same thing that one person or a couple of people can do. I don't know, but that's one of the things we help take a look at is like, okay, where is all of the money going? And is this the best place for it? We help you with that. And then we do regular cash flow check-ins, making sure that you're allocating your funds on that rhythm, making it into a system because every successful and sustainable business needs a system in place. So that is how we help your business. We help to give you clarity, build in profit discipline, save for taxes, have smarter spending decisions, and then regularly have cash flow check-ins or allocate on a rhythm. And then paying yourself is more predictable. We don't want you to pay yourself last. I know I've been there where I've paid my employees first because they matter the most, and then I just got what was left. But truly, to have a business that is successful and sustainable that works for you, you can't be paying yourself last. Like we got to change that around. And sometimes it is necessary, but the goal is to really get to a place where it's no longer necessary and that's no longer the norm. Um, okay, so I think that was whoops, lost my thingamajig. What is this called? PowerPoint. Yeah. Okay, so we talked about a lot today. The basics, basically, cash flow is really important. You need to have it in place. If you have a system in place, it's going to help to manage it better. It's going to help you be more consistent, proactive, intentional about where your money is going. But at the very least, just get consistent with your books and looking at your numbers. Because even if you do just those two things, you're going to start to see the trends. You'll start to see the things that are coming in and going out. You'll have a better understanding of what your cash flow is, what your profitability is, and where your money is going. So, we support CEOs who want to build strong, stable businesses with confident financial systems. Um, we want to make cash flow something that you manage, not something that you're fearful of or anxious about. So we do have our Facebook community, but we also have um, the Profit Sphere community that we are building with our education and our courses and that kind of thing. So if you want to talk more about your cash flow, your profitability, anything like that, I'm here for you. Hopefully this was helpful. Hopefully you walked away with a couple of things that you can do and implement. If nothing else, do that 1% savings of your reserve, create a reserve for account, put 1% of your income into that savings every week or at least once a month, and watch that grow. And at the very least, that will start to help and impact your cash flow in a very positive way. So let me know, drop a comment so that I can send you your free resource, and I will talk to you next time. Thanks. Bye.